Welcome back to the weekly wrap-up from the Asia Private Equity Center. I'm your host, Joshua Ma. If there's one takeaway from this past week, it's the sheer breadth and dynamism of opportunities across Asia's primary deal markets, from the record-shattering credit deals in India to landmark institutional shifts in Japan. We start in India, which continues to turn heads in this asset class in the region. The headline story here is Shapoorji Pallonji having raised $2.25 billion in private credit from a pool of returning international investors. Not only is this the second largest private credit transaction in Asia so far this year, but it also further cements India's position as a primary destination for private credit in the region. On the distress and special situations front, e-commerce player Udaan, once one of India's leading B2B platforms, is seeking a $160 million financing transaction to drive its operational turnaround. Meanwhile, on the venture side, India's space tech reached a new height. Skyroot Aerospace, backed by a premier roster of institutional sponsors, including Shapolo Ventures, GIC, and Temasek, successfully launched its first rocket into orbit. It's a huge validation of New Delhi's decision to privatize the space sector. Moving east to Japan, we saw a historical milestone for institutional LPs. GPIF, the world's largest pension fund, made its first ever direct commitment into a domestic Japanese private equity fund. It allocated 20 billion yen to Advantage Partners Fund 8. This signals Japan's top-tier institutions have reached a high level of comfort with local GPs' track records. Down under, Australia's deal flow remains buzzing. We saw significant inbound capital from the US, Europe, Singapore, and China deploying into healthcare, mining, and renewables. However, deal execution isn't without friction. EQT bumped up its offer price for the 140-year-old financial services firm Perpetual by 2% in an attempt to get the deal over the finish line. But Perpetual's board rejected the revised bid outright. In China, public offerings and deep tech scales-up are dominating headlines. AI startups are driving valuation to soaring heights with multi-billion funding ambitions. In the optical component space, Zhongyi InnoLight is preparing a secondary listing on the Hong Kong Stock Exchange to raise up to 63.3 billion Hong Kong dollar, or $8.1 billion, inclusive of over-allotment. This marks HKEX's largest listing since 2019. Notably, half of that total has already been pledged by private equity GPs and international LPs, a major vote of confidence in China's tech leaders. Conversely, in South Korea, we see a cautionary tale in the retail sector. MBK Partners is making a last-ditch effort to rescue supermarket chain HomePlus, injecting additional financial assistance to secure a deadline extension from the Seoul Bankruptcy Court for rehabilitation proceedings until 4th of September. Looking ahead to next week, all eyes will be on the public markets in Greater China. On 27th of July, CXMT, China's largest memory chip maker, goes public on the A-share market to raise 57.9 billion RMB, or $8.6 billion, the largest IPO in the onshore market this year. On 30th of July, Zhongyi InnoLight's secondary listings goes live in Hong Kong. Public offerings are clearly the primary focus for liquidity in the region right now. That wraps up this week's summary. For deeper data, market commentary, or to subscribe to our daily briefings, head over to www.asiap.com. Until next week, I'm Joshua Ma. Thanks for listening and happy deal making.